All right. So boom, guys, welcome back. Happy Wednesday. It's hump day. So hopefully you guys didn't get clapped. And we just sitting here being cautious about our capital preservation. All right. So Lisa, I appreciate it. Telling some of the friends in the group to join knowledgeable aspect of trading. Yeah. Tell them to come on. Like I love having more people within the family group. And truth be told, like, this has been the environment for years now. So it's very good that we're locking arms. So as we were talking about it, right? And again, I appreciate it, Lisa. Um, boom, Monday morning, we were up in such voluminous amounts of pips. However, within our conversation in the Discord, this 4 hour high was very cautiously spoken about. We're like, let's see. Now, personally, I've seen gold violate mad 4 hour structures when it's swing trading. But to be honest, as everybody started finding out that gold is like buying, I knew retail was probably gonna get hit. And so that's why I was like, was driving around running errands at night with wifey, and then around 10 I'm like, yo, I don't know if this thing is gonna break. So this is why I reached out to y'all. I said, hey, close more partials. And to be honest, I could have also said move stop loss into profit, but I figured you guys would know, right? I figured you guys would be like, hey, if I'm gonna close partials, let me move stop loss. And as we discussed it, it's always good when we move stop loss into profit after New York, so that way we can at least have some cushion, and hopefully everybody's accounts weren't blown because of this crazy historical pullback in one day. All right, because I hope Sunday swing gave that small account that we are building some very good cushion. Some of y'all grew your account to 300%. Some of y'all grew your accounts to 70% gains, 50% gains. And my hope is to show you guys that, all this stuff you see on social media sometimes, like 100 to a million, 200 to like however so thousand. I've done my fair share of flips. I've taken 65K to 182. I've taken 4K to 41K this year. I've taken $200 to two bands. I've taken 650 to $6,500 and still was able to pull out 3,000, along the way. So I know that it's possible to grow small accounts, but maintaining the account is like it's the most challenging part, right? Nobody tells you when I got to 41K uh August 1st, I thought FOMC was no, NFP was gonna take US 30 to the upside. And by 9:30, instead of pushing up and respecting the lows of London, it tanked. And I had lost my momentum at that point, right? And I noticed that the move happened the Monday after, and it really frustrated me.
Frustrated.
So I know how it feels to lose momentum and to be able to build back slowly. All right. So this is why, like, I also wanted y'all to see how powerful it is to take advantage of certain um, market conditions, because what you never thought could happen happened to y'all. Y'all seen $300 accounts turn into 1,200, and it was very um, satisfying for me because we found the best scenarios where we could do that. Some people never thought it'd be possible. Some people have not ever been able to take a small account to 1,000. So I really did not want this moment to be short lived, which is why I'm hoping many of you guys still have an account to trade with. So let me just ask it straight up. Do y'all still have a live account to trade with? Yes or no? Do
Yeah.
y'all?
Yes.
Yes,
Yes.
sir.
Yes, sir.
Yes.
Okay,
Yes,
that's what I'm
sir.
talking about. That's
Let's
what I'm
go.
talking about. Good, 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 good. Because the marathon continues. Marathon continues. All right. It's good to hear that. It's very good to hear that. So now, okay. Whenever y'all see the nails come out and Jaquel got that joint in the chat, it's okay. That's the okay sound right there. So now, here's what happened. We're talking in hindsight. We're talking in hindsight. Market came up here, could not break the 4 hour highs. And whenever the market fails to break 4 hour structure walls, it's coming down, it's tumbling down. But we didn't think it was going to tumble that bad. Yeah. it is just crazy. However, let's be honest, we needed a correction. Caesar was iffy about this rally for a minute. It's like, yo, I don't know, might be a pullback. And on Sunday night, we said, look, it might be a point where price, we wouldn't mind it coming back to 4,000 because it's so early into the fourth quarter. It'd be kind of bittersweet if gold already ran to 5,000. It's like, damn, the hype is done already, you know? So us seeing price at 4,000 and potentially coming down to maybe 3,500 or 3,800, it's not unlikely. It's not unlikely. Let's go back a year ago to see how unlikely that is. So last year in November 2024, I'm sorry, October 2024, we got to see a rally as well. We got October 9th. Price literally spent the whole month of October buying. End of October, price sold until mid-November. And from mid-November, price rallied, sold a little bit towards the end of November. Now, we all know November 5th was when Trump was announced as the winner of the elections. I was expecting gold to rally. It didn't. Instead, it sold until we made it here until mid-November. Took off, pulled back. First week was kind of weird. Consolidated, bought, pulled back mid-November, and then rallied from there. So I wanted to show you guys that type of reference just to let you know, like sometimes price does lose steam, pulls back in the middle of November sometimes, and keeps going. So just because in 2025, you saw like gold lost it. I know many people, just like our human nature, tends to be like, well, party's over, folks. Go back to your regular jobs. This was cool. Yeah. All right. I always knew this wouldn't last. We knew it was too good to be true. Relax. Slow your horses. Okay. This is nothing to be so like sad about, especially in a market where we could catch both the buys and the sells. Today, I purposely did not trade, and I honestly did not trade yesterday as well, just because I understand that trading is like driving. You gotta let a few cars, go through first before you switch lanes. All right, you can't be switching to every single lane at a time. You have to let things I almost said traffic it. I know the Africans would love me saying that. Trading is literally like being a good driver. Like you gotta yield before you know, cross the lane. You gotta yield before you cross the lane. So I like to wait for a day sometimes, just not to be trading, but to be learning. It's like, all right, let me see if I could catch up to your moves here. Let me see if I could study what's changed so I could catch on. All right. Every day is not a trading day. And of course, we sold Not barely anybody saw that sell coming. And but today being Wednesday, I saw that price pulled back to make a lower high. How did they do it? In London, they retested Tuesday's highs. We all know the 2-day retest is a very powerful confirmation. Boom, it's sold. So now in New York, we came here, and this was an intraday opportunity. I didn't catch it, but it was good to see. We're dealing with New York. 9:30 price came here, retested London, and reversed. How many of you guys know about the intraday New York reversal that gold sometimes would give or typically gives? So this is how I could have caught a nice trade if I was trading it. As we already seen a lower high here, price broke structure, and now we have to deal with the correlation between London and New York. So by New York, by 10, you remember I've mentioned that by 10, 10, 15, if if gold is reversing, it'll give you signs, and I would have just put my stop loss above London and target that low. It's just wild to me to see that this move alone in 30 minutes or 45 minutes, that's a 645 pip move. That's crazy. We are still living in a time where gold is giving some crazy moves. It's moving a lot of pips. So, in order to survive these market conditions, we still have to scale down. Like nowadays, 152 pip stop loss just to put it above the highs of London is not far fetched. You literally have to make these type of decisions now, not because of the pips, but because of the structure. Structure is a little further, but hey, 152, 580 pips, 600 pips. That's what the risk and reward was in this situation. So you can't be fearful about 150, 200 when you can potentially make 500, 2,000, 1,500. That's why a lot of people was kind of scared when I said, hey, Sunday, we're putting our stop loss below Friday's low, which was probably around 240 pips. But I said, when you scared about how big the distance is, lower your risk. Lower your risk. Think about it this way. Risking $150 to make 600 or 682. Risking $10 to make $68. That's the perspective you need to see it as. That's why a lot of people can't even grow an account because they don't think like that. I took a $50 account. It's sitting at 160 right now. I don't know if you guys remember when I told you this before. There was a point in time I'm sitting here trading large accounts to the point where I got a little dissociated with building small again until I took a big loss and I'm like, oh. And I started putting back the same 10 lots, 15 lots, 20 lots, and I'd get like shaken up every time. It would be like an 8-band loss in a day. I'm like, bro, you lost yourself somewhere, man. And I'm like, damn, how do I fix this? And I went back to trading small accounts and growing smaller accounts so I can remember what it feels like to lose around a range of like something that's a little less fearful so I could build my confidence back up. You know? So that's why like you have to be balanced. That's why a lot of y'all go and trade like prop firm accounts and you can't really trade small accounts anymore because you've kind of lost touch and disconnected with the risk. So that's also one of the things that I had to learn to relearn in this market because like nowadays it ain't about the 50 pip stop loss no more. It's not about the 30 pip stop loss or or 100 max is all I go. It's about reading a room, like reading the room when you're trading. Okay, making those necessary adjustments just so you can continuously do what you do. All right. Does that make sense, guys?
That's a great line. I like that, reading the room.
Mm-hmm. Thank you,
Yeah.
bro.
Yeah.
That was real good.
You know the pen still, right?
Especially, I think for me being a speaker,
Yeah.
yeah, it's so important, and that's something that I forget to do sometimes in trading. It's just like, yo, read the room. Yo, it's consolidating, bro. Stay out.
Mm-hmm. Facts.
Yeah, it's like this volume died up. Read your room.
Yeah.
Ooh, that's a great one. All right, I'm done.
Thanks, bro. I love it when my boy sees cosigns because he's like one of the world's greatest motivational speakers, by the way. Like this guy right here, he's nothing light. Um, so look him up. Cesar Rodriguez. Not even lying. It's an honor to have him on my live like right now. My brother, actually. So now, where are we at? We are now bearish for now, right? We are bearish for now. I believe, what is it, 1:23 p.m. I'm not trading this structure just yet, but sometimes by like 2 p.m. you can see price still like maintaining a zone where you can make a decision. But I'd rather like the next day, for example, pull up, see if they're creating a correlation between London by New York and continue to trade this structure to the downside. Because I think just like I don't know who this guy is in the chat, but he has great conversations. I think I've seen yeah, Kiskovich. I'm not sure who that is, but he's definitely been adding some value to the conversations. All right. So we can see my screen, right? Okay, yes, we can. Yes, we can. All right. Let me extend it just in case. All right. So yeah, I believe tomorrow by New York, if so, if by 10 a.m. we could see some opportunities, I'm definitely gonna be interested in taking sells. Um, we could probably touch 4,000 one more time, or you know what? Very realistic targets. They probably just touch that low one more time. I hate a long wick to the left on my chart because sometimes I'm like, yeah, we could see price go all the way to the downside. I'm channeling my inner Caesar right now. Yeah, we could see price go to the downside. And then boom, I forgot all about the wick zone here. When I tell you that's kind of what kind of messed me up late July and August, I would take trades. I'm like floating 8,000, 11,000. As soon as it reaches a zone where there was a wick and I'm looking like below the wick and they just stop and just reject and start pushing the opposite way. So let's be mindful of that. Losses are the best lessons. So, but I definitely see us going down to like 39.80, coming back to this low from sheesh, from the beginning of October 10th lows. We could clearly see that there's demand here. What do you guys think?
That yeah, I agree with you, man. I think I just want to add real quick that last night or early this morning, like 2 a.m. I was looking at the chart. I was trading it, and I saw that gold was not going up
Mm-hmm.
past I think it was 41.62, and so I hopped in the sell at 41.61. And so when I did that, and I was in profit, I noticed it wasn't going back up there again. Um, it made me think that maybe investors are like, oh, it's not worth it to take out the highs of the 3 a.m. open because because the buy side liquidity that was right there at that 4361 to 4365 was not enough to satisfy them. So I figured it's just going to keep going down to take out 39.95, which was Friday's low. Figured that it would do that first before it goes up. But there is that slight chance of it going either up first and then taking that 39.95, or going down to 39.95 and continuing down below. But my first preference would be 39.95 and then back up.
Yeah, I hear you. That makes sense, fam. I hear you. And I like it. Yeah. So yeah, that's definitely a 4 hour low right there. So Lisa says, yep, that's what I have charted. Okay, good. Yeah, so these are definitely the zones that we're gonna be paying attention to. The 39.50 range, the 39.95 range, it makes sense. Okay. So we're all in agreement with that. Cool. The next thing I wanted to talk about is why it's always important for us to see the confirmation out of 2 days. You know, till this day, it's still helping to make good decisions. When you can't really see what's going on and you get a 2 day retest, whether to the downside or the upside, it gives more confirmation. It's almost like two banks are making the transaction of retesting a zone and exchanging it. All right. So for the second time in a row, price when they retest a zone in 2 days, it gives more confirmation. So this is why, even though the jour said, hey, what you think about a 2 day retest up here? And I'm like, I don't think so. Nah. But I kept it in mind because that's Friday's highs right here. And if you can't break Friday's highs on a Monday, yeah, we could be selling. So the same thing is here where we saw on Wednesday, London, today in London, price came to retest this high. That was Tuesday's high and they sold. That's why I'm not really too keen on sometimes it's trying to catch a setup just because it made it to a low. It doesn't give enough data sometimes unless it retests. And I'm like, okay, now I know you serious about the zone. You get me? So that's why. And you guys got to understand these charts is what we see, but the transactions is what they do. Central banks, institutions, they're making transactions that are making the economy make sense out of whatever they're doing. I'm hearing China and Russia is back is like is investing in gold because of all these tariff scares. I'm hearing, different things, but we don't know all the information. We just see the charts. So that's why structure is very important and confirmation is even more important. Okay. So it is almost the end of the week. Government still shut down. And there's still uncertainty. Gold is still up a lot for the year. This is not like they're still up 32%. 30, hold on. Yeah, about 34% for the year since January. So unless price is making a lower high, we'll take a lower high trade, bring it back down. But we'll have to be careful. If right now your account has 700, 800, $1,000, you definitely don't want to be using big lot sizes. Because think about it this way. You could still risk $50 on a trade even if you have to move the stop loss and put it at 150 pips, $50 divided by 150, you're looking at 0.03 lot size. And that's another thing I'm glad I'm mentioning. Once the account starts growing, sometimes you have to sit before you take another trade and ask yourself, what range of risk should I be using now? Because sometimes we all get emotional and hasty and impulsive, and we just throw on a lot without thinking about the risk. And you're like, it'll work out. And you take that first loss and you're like, shit, I didn't have to lose that much. Damn. So from time to time, you got to stop and really just readjust your risk settings. Like, what am I going to risk now? In case I got to take 3 trades and 2 of them go bad, you know? So if you got around 700, 800, 1,000, 2,000, still use the 0.01s, 0.02s, 0.03s for now. It'll still give you great gains. 30 cents, 600 pips. You can comfortably sit with a 0.03 and let that thing do what it's supposed to do. Because look, with 30 cents now, you can still make $200 and add some good gains to your account. With $20,000, you can still use $3 nowadays and risk 150 pips, maybe, if that's what the structure is asking you to do. 450 won't kill you, but 3,000 times 580 pips, man, that's $1,700 for the day added to the account. So think wisely. Think wisely when it comes to these risks. Surviving these markets, and right now, if you're trading gold, is asking you to have a different level of humility for the sake of your account. I wish when I was like knocking stuff out the park, I had the wisdom to say, bro, slow down for the next couple of weeks. But I didn't really know what that is. And that's why, like, I've slowed down so much. I understand and I embrace the fact that sometimes a loss will humble me and force me to slow down and teach me to like learn something in the midst of that season. I get it now. I understand it now. Because I promise, starting this year, I said I had in my goal sheet, I don't care if I'm an intraday scalper / intraday trader. I want to know what it feels like to hold swings. Last year in Dubai, I'm watching Q. Picture this. One of your good friends, Jason Stewart, is up $300,000 on a trade that he's showing you. We both are in Dubai. James Storms, all of us, we're in Dubai. We're having a great time. Pull up in a Lambo, crazy. But one of us is up 300,000 on the trade. And I'm like, damn, Hans, what's stopping you from being a swing trader next year, bro? And I kept pushing it. I kept forcing myself to like extend my game a little bit, you know? As a mental athlete, I'm like, bro, what's stopping you from increasing your 3-point range? Like you great at like taking shots and layups and fadeaways, but bro, I need you to be better as a 3-point shooter, bro. Stu, he all right. He having a great time with his girl and still grieving his mom and healing. You know, he all right. I'm sure the trade is fine too, or he be all right. But I'm like, damn, I gotta learn how to swing trade a little bit more. And I've been pushing it. So there's been a few losses I've taken is because I've been holding on to some swings and then boom, something like that will happen. I'm like, okay, so note to self, yeah, sure, you're swing trading some opportunities off the 4 hour, great, but don't be so blind that you're not protecting the account as well. And I learned how to do that, sometimes through losses, whatever. But all this, the point I'm making is all this brought me to the point where by fourth quarter now, I've swung trade a few good times and I done caught a chunky piece of gold swings, which is why I became more useful to y'all and seeing the potential of catching what we caught. So it's always good to grow. So now, had I not taken a loss in August, it wouldn't have taught me to learn how to like slow down and for how long. Because I always kept saying to myself, man, I can't afford to slow down, bro. We got to keep pushing. I can't afford to slow down, man. Trading from a week to week perspective, it can wear you out. It can wear you out. So you have to like choose wisely whether you trade or you just sit and watch and learn, and then you trade like maybe once or twice during that week if the setups make sense, right? Because I probably would have had way more capital if I learned to just slow down for a couple weeks. You know, don't go aggressive for a couple weeks until you get to um late September, October. You know, then I would have been able to like have even bigger days. But the loss in August made me a little weary, cautious, and it's taught me to slow down. And I'm grateful for that because it forced me to adjust my risk and be able to be okay seeing some days that are not as huge, but it taught me how to swing. And I'm forever grateful for that. Year 10, I achieved some new levels. Swing trading. Wow. We're still learning stuff. And we still at it and we still love it. Okay? So I know everybody on this call is taking in this perspective and realizing, wow, there's a lot to learn here, huh? That's just what comes with it. All right, guys?
I got a psychology question, Hans.
Yeah.
So yesterday morning, I was listening to a TikTok live, and the guy was mentioning that when you when you're entering a position and you have full conviction of that position that you're in, you're looking at um, you're looking at your opportunity the same way as someone else is looking at theirs. But the thing is that the market movers, they have, the buyers and sellers, like if gold is at a specific level and it's in a good buy spot, buyers are going to take that buy and they're going to hold on to it because they're fully 100% confident in that buy. Um, if it's at a good spot, sellers may be trying to sell at that exact same spot to to offset that buy and gain their gains. You know what I mean? So, you think do you think it's more beneficial? Who do you think that's benefiting more, scalpers or swing traders, when you're looking at a specific zone, and or is it benefiting both? I might be just thinking way too deep. I just know that was just a good concept that I never thought about. Like, when you're in a position, if it's a good position and you have full confidence, the same way the market movers do, 9 times out of 10, you're going to get a massive gain on it. So I'm wondering if that is more beneficial for swinging or scalping.
It depends on what you're seeing. Like, and it depends on the money that satisfies you for whatever trade that you wanted to take. It's about satisfaction. Institutions have way different objectives than you, bro. You gotta think about it. An institution is not just trading for themselves, they're trading for clients. And the goal for the clients is just to see their money move from a year to year perspective. The portfolio grew. Sometimes year over year, meaning like, yeah, we ain't do too good this year, but the portfolio is supposed to be on a 3-year basis. They have time to catch up. They ain't just looking at swings, whatever they got to do, whatever strategies that are under the portfolio's game plan and the trade managers on the desk, da 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 da, blah 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 blah. That's what they'll have to do. Sometimes they have to have team meetings to be like, okay, these are the stocks and the equities and the futures departments. Whoop de whoop. This is what we're gonna do to be able to take advantage of uh, the cushion that we have, just to be able to take care of like Q3, Q4. You know, hey, we're not having to trade today. We're in some positions. The risk of ruin is uh is where it's supposed to be. Yeah, it's not about just scalping and yeah, it's a whole different ball game with these guys, bro. So I'm not sure if that answers your question.
Yeah, it does. It does. It does. I'm gonna look for some market movies this week too. Since I'm off all week. I'm looking at some movies this week with that perspective that you just explained.
Yeah. It's funny you just said that. I'm actually um working on building like a book club with you guys where the top books that honestly y'all just kind of jumped into this trading thing, and I know that a lot of us don't read books that should help you to understand things better. Meanwhile, I'm giving y'all answers because I'm reading big debt crises, like really good books that get you to understand what y'all be sleeping with the market and have no idea what this thing is about, and it's a little scary. Sometimes you go and looking for answers elsewhere when, hey, some of these books from the best traders and the best hedge funds in the world, they teach you a lot. Sometimes what you sort of kind of had an idea, or you always were suspicious of things. And you're like, oh my gosh, I knew it. Boom, mind to knowledge connection happens. Like, for example, I always knew there was a reason why, like, in February to April, the market will like pull back a little bit. I found that out not too long ago. And then I'll be locked in with ChatGPT. I'm like, oh, okay. I knew it. Takes notes. Makes you understand the nature of what you dealing with. Trading in the Zone. Yep. Very good book. Trading in the Zone. Very good book. Okay. So while you out here scrolling and watching every guru tell you how they made 300 grand and you don't have not even 100 bands to trade with, start reading. Stop scrolling, start reading. You know, one day that'll be me. Yeah, but you got to learn how to manage what you have first, then be able to move on to like these big, um, yeah. Anywho, so these are the things we're paying attention to. Gold, we have made peace that we are selling, and we just gotta wait tomorrow, for example, to see if price is gonna retest. And by 9:30 to 10:15, see if there's an opportunity. I will be jumping on Zoom with you guys just so we could trade together. All right. Now,
Hey Hans, it's Celine. I wanted to make a comment about the 4 hour time frame. You know that I do follow the market maker strategy,
yeah,
and I've also been studying the swing trading as well using the market maker strategy. So when I look at gold, I haven't been trading gold because I don't know how to handle the all-time highs um and whatnot. And I usually trade US 30. But as I'm looking at gold, I mean, to me, it's clear as day that, it's on a first level downtrend. So, like you said, looking at the 4 hour time frame, looking for that, a clear retest, because it does look like, we've had some consolidation zone.
Yeah.
So I guess I was just, sharing that thought that I do see I would be ready to sell gold
Yeah.
uh, based on the type of trader that I am. But again, yeah, like you said, maybe waiting for a better 4 hour confirmation or better pullback.
Okay. That
Do
makes
you
sense, Celine. That
do
makes
you
sense.
do you see it pulling back a little bit further, or do you feel like it would just start selling off from there?
Yeah, I think we could. Here's the thing. I don't want to go too far into it. I like
Right.
confirmation because
Mhm.
here's the thing, right? I do the best that I can sometimes online just to voice some things. I know what I say holds weight, and I know sometimes it could keep like stay in your mind as a static bias when I'm willing to change the bias if it has to happen. And
Absolutely.
yeah,
Mhm.
truth be told, on the 4 hour right now, if price wants to come down to 39.70, for example, or shoot comes down to like 30, nah, I doubt it. But let's see. Hey, we'll see. It probably gonna take at least 2 days. But remember, yeah, I know it's been a minute since you've been showing up. But Sunday entries or Friday to Sunday will set a floor. For example, I've been saying that the new all-time highs definitely was a very interesting challenge to adjust to. But then I started noticing, stop worrying about the all-time high, worry about how price is creating the higher low. Yeah, yeah. Because I noticed that I couldn't tell what the heck is going on and where price is heading. But then the answer came to you days after. All you had to do is be in position. So I would notice Wednesday, Thursday, Friday will set the floor. Mind you, 37.86 at the time in September 23rd was like an all-time high. I'm like, damn, so how we going? Then I'll notice by Monday, oh crap, what the heck? They created a higher low Thursday night to Friday. Dang it, where was I? What was I doing? How did I not see this? Then the next week, Thursday, Friday will make a higher low and then start buying from there. I wake up Monday morning, hey, new week, let's get to trading. What the heck? 600 pips. How did Sunday? What the hell? I don't even trade Sunday. All right, Hans. You might want to adjust to trading Sundays, brother. The best entries happen on Sundays at the higher low after prices made a new low, creating it Thursday night, Friday. And so from there, I started putting stop loss below Thursday, entering by 9 p.m. on Sunday. And we'll see what happens when I wake up the next day. And I'll wake up to hella profits, 1,000 pips. And people are like, how the hell are you doing that? Because I sat there and learned the changes to take advantage. And I had to decrease my risk because I'm like, bro, I don't want to wake up and I see $2,000 and 2,000 pips in drawdown. I'm like, all right, I need to just scale down. And so I scaled down, calmed my ego, started trading Sunday nights because I would notice that price will create that floor by Thursday, Friday. So I say all that to say I can't tell where the floor will be, but I guarantee you at some point, once we do stop selling, we'll find a floor and they'll use several days to do so for, by Friday, Sunday, and we'll figure it out then.
Right. So take it day by day and adjust.
Yes.
Okay.
Take it day by day and adjust. And those type of days be the beginning of the week, um, on a 4 hour time frame. That's how I've been able to adjust. Yeah. Okay. So let's bear in mind that FOMC is next week, Wednesday. Uh might not trade that day, but let's kind of go back real quick and remember what happened on FOMC. FOMC, when Jerome Powell stepped in and said, hey, we're going to decrease interest rates, price bought between 2 to 230, swept the 4-hour high, sold, and Thursday night, Friday morning, that's when they set the floor. And that's at the time last month, I did not peep until it started happening. I'm like, bro, what the hell? I'm trying to find an entry. I can't find it. Oh, Jesus. Guys, give me a second, please. 1 second. Sorry, guys. I started noticing that if the interest rates are lowered, maybe during that day of FOMC announcements, it might not show clarity. But if we create some sort of higher low by Thursday, Friday, I promise you, I will be swing trading this for the next week or two or even the month. That's why I'm like chilling and I'm trying to tell y'all to relax. If you can't pinpoint what the heck is going on with gold, it's going to be some fundamental factors that will help us catch even better opportunities, even on a moderate scale or conservative scale, because now we know once price sets in the factor of interest rates lowering, for example, or even if the interest rates don't lower by Friday, if they set the floor that week, by Sunday at least, we could be buyers if price creates a higher low. Does that make sense?
Yes.
Pay attention to how every higher low was made since September. They'll sell off, look like they're selling off some more. Then they'll find these zones and then use 2 separate days to set and plant the floor. And then by the next week, if you won't catch sniper entries per se, but if you end that joint conservatively, a few days from now, you'll be up in profit. And that's how I was able to like catch these things. Like Tuesday, boom, they pull back by Wednesday, Thursday night, Friday, they Sunday continuation. And so it would be Thursday retracements, Friday they set the floor, Sunday, Monday they're buying. And so when these interest rate decisions get made and they're lowering interest rates, it doesn't just give you a good trade opportunity for like the day. They're pricing in for the next week or for the whole month what they want to see for gold. And I'm really looking forward to see if that's what they're pricing in, which is why I'm grateful for the retracement. Imagine price comes back here at, I don't know, 3,500. I don't know, right? And we start to notice that they're creating the higher low. We still got November. We still got December. Like, imagine holding a position like Friday the 19th. Price went 7,000 pips, 720 points in 27 days. I want to hold a position for a month, yo. Based off the right circumstance, I want to see what that's like. Imagine making $72,000 with a one lot, scaling up to one lot. 0.01, 0.03, 0.03, 0.04, like just scaling a small account. It can happen, but you gotta be real skillful, right? You have to be. It'll be challenging, but imagine making $20,000 with a 0.04 and letting it rock a 0.03 and giving it a whole month just to run. It will be challenging, but imagine everybody claps for those who did it. Think about the process they went through. Okay. So this is why it's very important to really take your time, pace yourself. You're in your own race. Just keep learning. Miracles happen on these charts, and opportunities happen if you stay long enough. All right, guys. So that's what I had to say about US 30. Let's talk about YM/US 30. That's what I had to say about gold. I just called myself. I did not think we was gonna buy for sure, but I thought they would stop here, and that's why I wanted to just watch. Today, US 30 came to retest London highs, and by the 9:30:10, they retested it. They couldn't break higher, so they sold. I didn't expect all this to happen, but there was more fundamentals that's going around about how like tariffs this and China that, which is kind of keeping investors in these institutions from pumping buys into US 30. However, US 30 just broke structure and made a higher high, and it's pulling back in to make a higher low. Last Friday, when I dropped the analysis and I said, hey, US 30 has retested last Friday's low, they respected it. They bought. And Sunday, Monday, again, price continued. Price continued pushing. So it was just not an easy price action. But sometimes, man, like people hold swings like these just off the strength of understanding how much time you have for price to move when price touches a certain area. Celine, I want you to pay attention to what I just said. It's not just about the 4-hour time frame. It's about understanding the behavior of how far price moves when the market bounces off of a very, very important zone. You get me?
Yeah.
That's what I really had gotten good at. I'm like, damn, okay. So when you bounce off of last month's lows, it takes 2 weeks to buy, but you be buying. I'm like, wow, on a daily demand, it takes a full week for price to develop after it bounces off of that. I'm like, okay. Wow. So 4-hour structure, price comes back and retests the previous week lows. You're gonna be buying for at least 2 to 3 days. Got you. But now that I have the answer, what tool do I use? Like what risk do I take to be able to sit comfortably for 2 days? And the answer kept coming to me, yeah, bro, you're gonna have to be conservative and moderate to comfortably sit through that. But everybody's happy when you look a few days after and then you're up 1,500 pips, for example, off of US 30, and you go online, let me show you how I made $3,000, blah, blah. Oh my God. How do they keep doing that? Let me walk you through how I made $30,000 trading US 30. Ugh. When will my day come? Well, gotta figure it out. You gotta know the behavior of certain extensions of price movement when price does certain things. Then you will be comfortable to put 3 lots of your own money and wait 3 days for you to make 30 bands. It's not by accident. That's why yesterday Harold called me. Harold, you're here? Okay, he ain't here. Either way, I'm gonna say it. He calls me yesterday. What's up, my brother? Man, I could have made $500,000 yesterday. And immediately I'm tight. I'm like, did you plan to make 500 racks yesterday? No, bro. But I looked at it. I took the ruler, man. I pulled it, man. 3,000 pips, bro. Would have put a 10 lot, man. Oof. I'm like, yo, stop doing that. You did not wake up and plan for the market to fall 3,000 pips for you to say at that moment, I would have placed a 10 lot because you knew it was going to move 3,000 pips. You don't even have a balance to handle the drawdown and the risk. You'd be risking at least $20,000 to $25,000 on a lot size to even make 500K off of a $3,000 pip. Stop forcing the reality of what you was not prepared to, the risk you was not prepared to take. If you're a trader and you keep saying how much you would have made knowing you can't even hold a pip past 5 minutes, shut up. Like, don't do that to your mind. You got to build certain levels of resilience, stomaching things, right? You got to build a certain level of holding your breath underwater to make certain type of profits. It's levels to this. That's why it's important to learn certain behaviors. I knew we could have made 1,500 pips. I didn't just speak it into existence. I've been watching gold literally print 1,500 pips for weeks from Sunday. I'm like, y'all want to make an extra $1,000? Everybody like, yeah. I've never seen you guys react to my post on that Telegram so much as y'all did last week. And I'm like, look at this. I'm laughing to myself. Everybody wants to make money, but they never figured out the plan, how to make it. I knew the plan. And some of y'all was still too scared because you haven't built up that level of what's the word? You just haven't built that level of holding your breath to even catch the 1,500 pips.
Confidence.
75% of y'all did. Yes, confidence. 75% of y'all did. And that was an experiment just to show you you don't just wake up and make certain types of profits. It takes a little bit of luck. It does take a lot of planning, though. I've been watching that joint for weeks. I missed out sometimes. I'm like, bruh, how the heck? $1,500. Every time I pull the ruler, I'm like, bruh, oh my God, 1,500 pips. How could I have made 20,000? Well, sir, you would have to you have to do the math. One, two, are you okay losing this amount of money? Okay, then you're not ready. If I do 20,000 divided by 1,500 pips, I would have needed just 1.3 lots. But it's either I would have to put 1.3 that Sunday in London or have to divide the positions by $2.60. And by the time it makes it to $1,500, it still wouldn't be exactly 20,000 because I would have had to put 5 positions of 2.6 at the beginning or in London. So that way, by the time it reaches 1,500 pips, I'd be floating 20 bands. So that's why you guys have to pay attention to what account size you're using to make certain numbers happen and what scenario that you've been seeing to give you that momentum, that confidence to build up to it, to taking that trade. And so it doesn't just happen by accident. So if you can't have a big day like that, focus on the ones you can do. 300 to 1,500 or $500 to 3,000 was a great record in your trading journey. It can happen again, but keep studying what these charts are telling you that they're capable of doing. Make sense, guys? All right. Lastly, US 30. I'm waiting for it to come back to this low. Just to see if they're gonna buy it back. But the market seems a little weak. And truth be told, we shouldn't force nothing so we can end the week positively. Because I think price is kind of slowing down and wanting to see what Jerome Powell has to say by next week. So please don't force your trades. All right. Please don't force your trades. Especially when you're trading indices. These guys, all they do is retest bottoms and buy back from them. You don't need to force nothing. Wait for them to retest bottoms. You'll think you missed a whole entire move. One day you wake up, sells off. Retest, out of there. So just vibe, just chill. Pace yourself and you'll be all right. You'll get more payouts and you're going to be more profitable. All right. So with that being said, guys, I really hope you enjoyed today's webinar. And I hope it brought a lot of clarity. And yes, it was recorded, D-Money. I will give you guys access to this as soon as the recording is available. You're welcome. All right. Enjoy the rest of your evenings.